Okay, hi and welcome. I'm Jan Copeland with the Real Estate and Real Life show or podcast with Jan Copeland. Someday it'll be a podcast. But anyway, I am here with two amazing people that I've known for many, many years. As many of you know, I had been a realtor for 11 years. And for the last 3, before I sold my team and became a full-time coach, I worked with Jake Gregory, who is one of our guests today. And he's a branch owner and mortgage loan officer with GoldStar Mortgage, and his wife, Chelsea, and their new little baby girl. But I want to just share with you that Jake was instrumental to closing deals, not 90% of the time or 95% of the time. It was 100% of the time. And so for me, having been in real estate as a top agent, I needed someone behind me as a lender who I knew would get it done. Even if I had a buyer who came to me through another source who already had their lender, sometimes their lender couldn't get it done. I'd call Jake in the 11th hour, he'd get it done. So now his wife joined him because back then she had her own career, and now they're joined together. So the first thing that I want to say is that you serve people, agents and clients in Virginia, Maryland, West Virginia, and PA.
Yes, ma'am.
Okay.
Yep.
And so why don't you talk to me? Let's talk about refinancing. Is now a good time to refinance? Are you seeing busyness with that?
So yes, it's crazy. And I actually just put a video out on our Facebook page about that. The thing when it comes to refinancing and the pandemic that we're in, with the things that I pay for and information I keep in front of me, everybody wants to get the best rate, obviously. There is money you can lose by waiting for the best rate based off of the equity you're going to have in your house. I'm trying to think of the best way to put this. So if you wait to refinance to get an extra 0.5%, the equity that your home is gaining over that year wait or whatever it is, you've already lost value. You're not going to recoup the difference in your interest rate versus the equity you would have otherwise had.
Got it.
So we are seeing a flood of refinances. Rates are kind of everywhere across the board because servicers are in trouble. Forbearances are out there. There's a lot that's driving rates and making them currently above where they should be when it comes to the MBS market. Doesn't mean it's not a good time to refinance. You should always look at it, especially during this pandemic. That's a good way to free up money if you're looking at some kind of financial difficulties, if you need to get money out for some padding, if you need to save on monthly expenses, if you need to consolidate debts, because a lot of times your interest on car loans and credit cards are way higher than interest rates are on mortgages. So there's a lot of good reasons to refinance. Even if you're thinking about waiting, it's worth the conversation as to what we can do for you.
That's awesome. Yeah, and the other thing about you guys is that you ask a lot of great, deep questions, because when you do that, then you're able to really, really tell the people that you're talking with, your potential clients and past clients, what's best for them. So I really appreciate that about you. So, so your little baby girl is new and it rocked your world. So are you guys getting any sleep?
Well, she sleeps good.
Yeah,
she sleeps good, but she keeps us active during the day.
Yeah.
So,
yeah, I can because of business, I do the baby.
So she's your little coworker. So she doesn't want a nap. Is that it?
Correct. Yeah.
Yeah.
She enjoys watching us work though, so it's good.
We're training her.
Oh, she's so cute. Is she 4 months?
Yeah, she's 4 months now.
Yeah, she's 4.5, right? 19th, she'll be 5 months.
Oh my gosh.
Yeah.
She's so beautiful.
Thanks. We just gave her first cereal today, and it was an experience.
Did she like it?
She doesn't know yet.
Oh my gosh.
Yeah.
She's so cute. Okay.
Thank you.
So, can you just, and I don't want to like go into this in a long detail, but I want to talk about 2 things: forbearance, and then I want to talk about as states are coming off of they're loosening and people are going to start going back to work. Maybe not in Virginia or PA, but maybe in other states. I want to know what. So if somebody's been furloughed for a month, and they get called back to work, can they buy a house? Let's start with that. Can they buy a house, and how many pay stubs do they need? Just talk to us about people that have been furloughed that are going to be going back to work.
Gotcha. So a lot of that, when it comes to lending, is up to the investors. They want certain things when it comes to different loan types, can have different parameters. We've got one right now that just needs one pay stub as soon as they come back, and that is actually, he's supposed to get that today, so we can close on their loan anytime after today because they have one pay stub back. I think you're going to see a lot of lender to lender basis, depending on what their investors are requiring that are buying these loans after they close. So as far as the furloughs go, I think the maximum any lender is going to require is 30 days. So if you get back to work, you show 30 days of stability with that job and your hours and pay not decreasing off of what you had before going into furlough or finding that new job even. If you've got 30 days, it's going to be acceptable from what I would expect. When it comes to the forbearance, you got to be really careful with forbearance. I've actually had a few folks that have reached out to try to refinance, and you can't while you're in forbearance. They've got to make sure that when you are looking to refinance your home, you're still making those on-time payments. There's a chance that payment's not on time when you come out of forbearance if there is hardship, and you won't be able to get that approval. The forbearance is not forgiveness. That's the main thing we have to know about forbearance. It is a delay. It gives you a period of time where you don't have to make that payment. A lot of lenders, servicers actually, are requiring that all 4 payments are going to be made on month 4. If you get a 3-month forbearance and it's $1,000 per month, when month 4 comes around, it's $4,000 due. If you are reaching out for forbearance, I mean, if you're in that situation, please explore that. It is there to help you, but just make sure you understand what's going to happen, because usually what's going to happen is that 4 months due upon the next payment. Some lenders or investors are stretching it out over a year to kind of roll that into the amortization. They're re-amortizing the loan. And then some, but very few, are allowing them to tack those 3 months onto the end of the loan and just lengthen the loan, but those are rare scenarios. So just make sure if you're looking to do that, you ask those questions to know what to expect.
Okay, so a question. If somebody just reacted and got into forbearance, can they just start paying their mortgage and then they're not in forbearance anymore? Or, you know,
you can come out of forbearance at any point in time. You're going to want to call I had to grab the toy for my dog or it was going to start squeaking. Sorry.
Okay.
You've got to call your servicer to see what they're going to require, because if you're in a month forbearance and you come out of it, you're probably going to owe that 2 months. So you want to make sure before you do that, you don't put yourself in a position where you are now late on your mortgage because you can't pay it. That would be worse than waiting until you had the money to come out of 4 months. You know, that the forbearance doesn't keep you from selling a home or buying a home, so that's good news. But for a refinance, you got to be out of forbearance.
We also, like, obviously I'm processing the loans. We have seen that the condition that has been added within this week is that they have to write a letter of explanation that shows that they are not going to do forbearance, just to protect these investors. You know, they get the loan and it's sold, and then they don't make a payment for 5 months.
Yeah.
So we actually have been seeing that on some of the files where people have to write a letter of explanation that shows that they are not going to do that program.
Yeah.
Okay. Oh, that's good.
To add to that too, I'm saying this quick, with a little bit lower credit scores right now, typically below 700, we're seeing requirements of 3 months reserves. And I believe that's because if someone calls in to forbear on that loan, then the investor is going to say, hey guys, you had 3 months of reserves before you closed on the house.
Yes.
To approve it. So just be aware.
Oh, I love that. I mean, that's good information. So you're saying that when they bought the loan or when they closed on the loan, they required that 3 months, right?
That's a condition for the approval and to close, is having 3 months of reserves. Because right now the CARES Act that the federal government passed, it's allowing anyone that has lost their job or in financial difficulty, if it's approved, they're guaranteed to be allowed that 3 month forbearance. So now we're seeing investors require 3 months of reserves. And I haven't seen it yet, but you know, this is brand new, so we haven't seen these loans close yet, and the situation of forbearance happening. But there's a concern of loans closing and immediately being called to forbear. And I think that condition we're seeing on lower credit scores is because of that, the CARES Act. Investors don't want to close a loan if someone can't make the first payments.
Right, exactly. Okay, so what do you guys do fun during the quarantine? Like, what are you guys doing? First of all, is your state still on lockdown?
Yes.
Okay, so what do you guys do when you're not working?
I smoke a lot of meat on our smoker. I'll put it that way. So cooking, yard work. We've just been it's been abnormally busy. This may be the busiest time we have had in this business the last month and halfway through the last month. So it's been a lot of work, but the kid and work is enough to keep us busy.
Yeah. So what you do on off time is crash on the couch to the extent that you can.
Yeah, we just sit down and watch one episode of Netflix is kind of what we look forward to.
Oh, that's awesome. That's awesome. Let me just see what else I wanted to ask you about. So talk to us, because I know that you're so, last question, I know that you're so wanting to make sure that you offer the very best loan program for your clients. So what kinds of questions should they be expecting, either when they call you to refinance or they call you to, inquire about getting a pre-approval?
Right. So starting with the refinance, it's understanding points. Well, first, I want to know how long someone plans to stay in a home, because if it's a 5-year home or it's a stepping stone into a bigger home or whatever that living situation is, that plays a big role on even rates, because anybody can show really good rates. They try not to disclose costs. That's a whole nother conversation. But if I know, number one, what kind of time frame someone's going to live in the house, I can then look at if it makes sense to pay for a better rate. Because just because you're getting a better rate, there are expenses with every rate. You either get a credit if you have a high rate, or you're charged if you get a lower rate. So depending on how much that charge is, you may never see a benefit to that. So let's say it costs $4,000 for some rate that's out there that you really want, but that only saves you. My dog's going crazy right now. I'm sorry. That only saves.
It's only when we get on the phone, though. It's never, anytime that we're, just doing, lounging or whatever, he doesn't want to play. But anytime that we get on the phone,
when the attention's off him, maybe.
So let's say that a really good rate costs $4,000 at closing. And then let's say that saves you $40 a month. Well, that's 100 months before that $40 equals that $4,000 upfront expense. So if you're not going to live there for 10 years, you've spent more just to have a better rate than you're ever going to have a benefit of. As far as loans go, there's a lot more than rate that's involved with the loan, because you've got mortgage insurance. They're different on different types of loans. Sometimes, depending on the current debts that are being carried, there's only specific loans that are available, because some loans are more lenient with the debts you can have versus others. So really, we're helping people make the biggest financial decision of their life most times. So it's important to me to know how long they're going to live there, if they have a budget in place for their household, if they've actually thought about the expense of the house. We talk more about the monthly cost of the house than the purchase price of a house, because that's the real impact to someone's budget and their finances on a monthly basis. So if we can find that point, then every home they look at that's within their price range, they're comfortable making a decision and pulling the trigger and not losing out on the house when they find the perfect one. So it's a little bit different approach. Instead of just telling people you're qualified up to this amount and go find a house, we want to actually understand the financial situation, make sure they're comfortable, and have those deeper conversations.
I love that, and I appreciated that with you, and I want to highly recommend that people call you. I did think of one other question, and then I'm going to want you to share either your phone number or how people can get in touch with you. But
okay.
Are there any 0% down loans either in PA, Maryland, Virginia, or West Virginia?
Yes. So the loans have not changed as far as, USDA availability and different things. And there's a lot of down payment programs and different things that are out there, but we have to be cautious right now with down payment assistance programs, because we're seeing a lot of investors don't want those loans. So it's starting to restrict the availability of, they're still available, but lenders are backing away from them, because as a lender, if we do a home loan and give, $250,000 for someone to buy a house, but we don't have someone that will buy that loan and hold it long term, then we have less money to keep lending, and that is not good. So the state programs, the government programs, they're typically still available, but the Chenoa program is one of them that's out there that's like a private corporate. The private ones are going away. They're not going away. I'm sorry, let me rephrase. We're seeing a lot of restrictions with what investors will actually buy loans with. Yep. Yeah, Wells Fargo. Wells Fargo
Yeah.
this week decided to stop doing cash out refinances completely right now. So
So
it's,
so nobody offers cash out refis.
it's you might find some niche companies that still do, but right now those that are concerned about I mean, if we go back to that forbearance issue and someone getting a cash out refinance, it's a red flag, is how
Yeah.
Wells Fargo is seeing it right now. So they've decided to stop for the time being. But I think we're going to be getting back to work and coming out of this recession, or starting to come out of this recession and see where things really are. And we're going to see things start to normalize and programs come back and some things happen over the next 3 months, maybe.
Yep.
So it's going to take time. We've got to see the economic news come out, the GDP, where it's going to be for the year. Third quarter, I think, is where all the experts are saying we're really going to know what's happening, and we'll see the mortgage industry react to that at that point in time. But your USDA loans are still available. They're 0 down. You got the 3% down conventional loans. That's a whole nother conversation because that mortgage insurance there can be super high.
Yeah.
You still have 3.5% down FHA. They're super lenient. It's the most lenient loan that's out there. You still got VA for veterans that are no money down, and then local government programs or state programs. We're seeing our investors still want to work with them. They just won't work with private companies right now that provide that assistance.
Got it. Well, GoldStar Mortgage, Jake and Chelsi Gregory, and sweet, sweet baby girl. How can people get in touch with you on anywhere you want them to? You
Yes,
tell.
so the best number to call is 304-247-1560. That comes directly to me, and it also comes to my partner. If I'm in a meeting or can't answer, we have someone that should be able to pick that phone up and make sure our folks are taken care of. So that's our best number to contact us and see how we can help. And we don't force people. We don't pressure people. We want to make sure everyone's comfortable and making a good decision when it comes to home buying.
And how about on Facebook? How can they find you?
Oh, man, you're hitting me with this. If you search for GoldStar Financial Eastern Panhandle, that's where our branch is located.
Okay.
You should be able to find it. That's our branch's webpage. You can message us there. Our whole team's on there, so all of us can help you. We have, it's me and 4 ladies, so I need some diversity. Loan officer.
I love it.
We'll all manage that page, so someone will be back in touch with you pretty quickly if you do send us a message there.
Awesome. Well, Chelsi and Jake, thank you so much. And you guys are awesome. And it's been my pleasure to interview you.
Thank you, Jan.
Thank you, Jan.
You're always
And
awesome.
have a great
Thank you.
rest of your day.
You too.
too.
Bye-bye.
Bye.
Bye.